day, everybody. It is Tuesday, May 5th, 2020. I'm here with Ian Klassen. He's the CEO of GMV Minerals. GMV is a company that I follow in the HRA Advisories newsletter, and Ian was a presenter at last week's virtual metal investor forum. Essentially, GMV is a fairly simple story. It's a one project company. They've got an advanced volcanage gold project in southern Arizona. Got a resource on it. Had a PEA done about a little over a year ago. That PEA, when it came in, was somewhat surprising to me, and I think to management, for the level of capex that I think came in higher than I think anybody expected. As it happens, GMV is now in the process of updating the resource, mainly so that they can generate a new PEA, and then they'll immediately go on to that. Can you give us some sense of what the timelines are now, Ian? I mean, I think you're into the resource recalculation again, or updating at least.
Yeah. Good morning, Eric. Absolutely correct. We have re-engaged Tetra Tech and DRW Geological Consultants to both co-author a revised mineral resource under CIM best practices as we head into a new PEA. It's a requirement that one articulates the work that was done in a drill program. And because we drilled 11 holes in 2019 within the pit in order to refill and take some waste categories and put them into ore because of the way the spatial drilling was done previously. We've got to go through that exercise. We're expecting our new resource numbers imminently, let's just say within the next 7 days.
And just to be clear, the resource was done, it basically has to be done as part of the new PEA process. I don't think GMV would have bothered doing one after one drill phase. That said, my recollection from going through that drilling with Dave Webb last year was his main purpose for doing that was to drop some of the waste out of the resource calculation, because there were 2 or 3 areas right in the middle of the pit shell where, just because of drill hole spacing, the engineers weren't willing to call it ore. It was essentially defined as waste. So just doing that is going to bring the strip ratio down, which is a good thing. That in turn, you might see the grade pop up a bit. I'm not expecting big growth, but I am expecting it to improve things. Now,
yeah, we're looking at a modest growth, and you're right about the strip ratio. It's already a low life of mine 2.8, but when we're filling in these gaps, of the 11 holes, 10 of them encountered better than our cutoff. So we're anticipating a nice bump up, both in terms of tonnage as well as grade. But we'll see. We'll know soon.
And to be clear, there is still room. There is still room at Mexican Hat for the resource to be grown. It is open in several directions. And I think you guys have a target or two that immediate vicinity of the resource that you've really never tested before, right?
Yeah, that's right, Eric. We are open to depth. We're open to the north. We're open to the southeast. And we've also got, which we haven't spoken about, very often, but we've got something called the Little Hat, which is about 700 meters to the south of the Mexican Hat. Is just a smaller version of it. We've spent a good amount of time collecting hundreds of soil geochemistry samples, and we've done some geophysics on it. We know it's ready to be drilled, and when the time is right and the budgets are there, we'll be testing it.
Right, and Mexican Hat, as for those of you who don't know the company, Mexican Hat is essentially named after the topography. The deposit itself is part of a hill that bears a great deal of relationship to the top of the Mexican Hat. And because of that, that's part of the reason why the strip ratio is fairly good, even for a sort of a structurally controlled deposit, is because you're basically just mining off the side of a hill. You're not digging a hole into a valley. Now, obviously it's no secret to you. I mean, we've had several conversations about this, and I'm sure you've had hundreds of conversations about this with other people. A lot of people were unhappily surprised by the capex when the last PEA was done, and I know essentially changing the parameters in order to improve the economics, but as a focus, I think, to bring the capex down. That's really what this new PEA and this new engineering group is all about.
Yeah, in fact, we were approached by a well-known investment banking group in the U.S. that had a look at our PEA. This group in particular, 40, 50 years experience of putting mine sites, potential mine sites like ours into production. Had a good look through the PEA, know the personnel that put it together. We're very complimentary about the style of work that they do, but just feel that Samuel Engineering might come forward with a different set of eyes and a different approach. And indeed, through many discussions, we believe that that's the case. You're going to see a number of changes, from even an engineering standpoint to the types of equipment, to the types of pads, to the operatorship, whether it be a turnkey or otherwise. There's a number of different methodologies that will be used in order to bring our capex down. The rules dictate, Eric, as you know, what I can really talk about at this point by way of the economics. But we have every reason to believe that our capex number will come down to a much more manageable number.
Well, and I believe part of what this update's going to do is essentially you'll bring the production rate down a bit, and you'll by doing that you'll basically expand the mine life. And my understanding is this U.S. finance group that's been advising you, they basically told you that getting the mine life extension sort of in and of itself is actually going to make this thing a lot more financeable, even though the production rate's lower.
Yeah, through conventional methods, you're right. I mean, as of right now, the PEA that we have in place has delineated a 5-year mine life that's open to expansion, approximately 94,000 ounces a year of production over those 5 years. I think peaking at about 114,000 ounces. But that just does, we have an option to either go and raise exploration money and keep drilling to build tons of ounces, and/or redo for the money that it's going to cost with a new approach, what will ultimately put out an 8-year mine life, producing somewhere in the area of about 60,000 ounces a year, which was a much more palatable use of shareholder money.
Okay. And once this PEA is out, I think there's still probably pretty good odds you will in fact go back and do some drilling to make the thing bigger. You just kind of want to get a new base case going and get the market to sort of look at it with new eyes once you get this new PEA out. That's the idea.
Yeah, 100% correct. Not only will we be able to go back and drill to expand the resource, being already open in 3 areas, plus we've got the little hat to the south, but we're looking to also mature the resource from an inferred to a measured and indicated category, which will actually doesn't look like it's going to be very many holes in order to obtain that. So even just looking at the modeled pit, we're probably looking at about 15 to 18 holes in order to bring the majority of it up to a measured and indicated category, which will be important moving the project forward into pre-feasibility.
Right. Yeah, because you need measured and indicated for feasibility. As things stand right now, it's not, GMV's not getting a huge amount of value. I guess the other thing that you'll get, and I don't know what the current number is that engineering groups are willing to go along with. They generally use 3-year trailing averages, but even only being, say, a year and a half out from the last one when this one's completed, I would expect the gold price that'll get used is probably going to be quite a fair amount higher. Probably even using 3-year trailing, you're probably lifting your gold price assumption by $100 an ounce or something. You would still be well below where it's actually trading today, but it would be higher than that. I believe 1,300 is what you used the last go around, right?
Yeah, the last go round was a base case of $1,300 gold. I think it's safe to say in a rising gold market, which we've seen largely in 2020, and the consensus is we're likely to see it going forward. I would bet that we're going to see a higher base case used in our next PEA.
Okay. Yeah, GMV's got it's got a nice, simple resource, 650,000 ounces, give or take. Very good metallurgy, really, really good logistics. I've been on site. It's very easy It's very easy to get around. It's very easy to get there. There's power there. There's water there. It's not in a sensitive area that I know of. There's nothing particularly special about the area. The local landowner who I met when I was down there is quite supportive of the whole thing. He'd like to see it get built. I think in this gold market, this is not an expensive stock when you're looking at something that's got a PEA and a resource that can be grown already. I think it's just a matter of getting out there again. And I think one of the important things that I know you committed to in the last month or two, and I think MIF was the first example of that, is you and the rest of the management team have committed to getting more visible about this and getting out and marketing it and introducing some new eyes to this story now that there's a gold market where people actually care about this stuff again.
Yeah, absolutely. To that end, we will be taking the story to groups that we haven't met previously. We do have a path to the next 4 or 5 months that certainly put a better face on the company, as it were, and by way of technical reports, which is really what matters in this age, not what companies want to go out and necessarily market, but we'll have the facts behind us. We are also in the midst right now of applying for a U.S. listing to make it easier for our U.S. Interested parties to participate in an ownership going forward. But yeah, we have kept our heads down a little bit as we're looking to define our way forward. But we've now got that firmly in hand, and we'll be out telling the story.
And one thing I'll point out as someone who is a shareholder of the company, in fairness to management, if you take a look at the SETI filings for GMV, I think you'll find that GMV's management and board has kind of put their money where their mouth is. It's been fairly common to see them show up as buyers in the market of their own stock. So, it's not like they didn't believe in the story. I think some shareholders felt they just weren't marketing it hard enough. But you got to have something to talk about. And it looks like over the next 3 or 4 months, you're going to have new resource, new PEA. I think there's still some geophysics floating around that presumably the geophysicists are going to give you a report one of these days, so you'll be able to talk about that as well. And then coming off of all of that, there's going to be a bunch of plans to move it forward yet again once you get those out. So there should be some news flow.
Yeah, we think the value proposition is a very strong one. We're currently valued at approximately 7 million Canadian dollars for having roughly 500,000 extractable ounces in an extremely safe and mining-friendly jurisdiction with great metallurgy, with upside potential by way of expansion. We think by the end of the summer, we'll be able to clearly point to a value enhancement for our shareholder base.
Okay, there you have it. Simple, straightforward story. To me, seems like a good story for a strong gold market, which is what we're in right now. GMV Minerals, GMV is the ticker on the venture. You should listen to Ian's MIF presentation and apprise yourself of the story, because I think it's going to be a good one. Thanks, Ian.
Thank you, Eric. Thank you, everyone.